Major moves are coming to the crypto and stock markets, but which direction is the question on everyone's mind? We're continuing to juggle what seems like day in and day out, bullish versus bearish, bearish versus bullish. What does any of this mean? And if you're wanting to make money long term, what is the best strategy right now? Is it holding? Is it making these micro trades? Well, today we have a special guest joining the show that's going to help us break down the macro environments and what you need to be thinking about for all of your investments long term. We are reaching a key decision point of support. What happened next? Stick around for the entire show. If you enjoy the episode, make sure to smash that like button and hit subscribe as well. But first, we got to roll the intro. Welcome in, everybody, to the Investing Bros live show. As I said, we got a special guest here today. We all love Smay. We all love T-Shroom. But down there in the bottom right corner, a man that some of you love, some of you have no idea who he is. This is Caleb Franzen, one of the best friends of the Investing Bros channel, local expert. And I say local loosely because he's nowhere close to us right now. Where are you in the world right now?
What's up, guys? Happy to be here. Calling in from Tivat, Montenegro, a very not very well-known place, but here I am.
That looks nice in the background. Listen, it looks like a great place we need to visit at some point.
my Airbnb is solid, but it's a beautiful town. You gotta look up some photos sometime. Tivat. It's beautiful.
There we go. Like I was saying, the local macroeconomics expert, always love getting his take, especially in things like what's been happening over the last couple of weeks. Today, we're going to talk tariffs. We're going to talk inflation. We're going to talk World War III. We're going to talk about what's happening, all this stuff, and get Caleb's take on it. A lot of you guys know what we think, but cannot wait to get his takes as well. But before we do that, we do have the rest of the show to conduct. Got Smay down here below me with the Harry Potter glasses once again today. Smay, how are we feeling?
Oh, Tim, always great, always sun shining. I'm wearing my burnt orange shirt. And, I'm ready to get this show on the road.
All right. And last but not least, T-Shroom, how are we feeling today, my friend? How you doing?
Oh, man, I'm doing better than I deserve, Tim. Got to go on a nice little walk today, stretch my legs, get the heart rate going. So I'm excited about that. And these eggs prices, we're going to talk about them today. These egg prices are coming down. Ooh. So I'm finally able to feel a little better about the scrambled eggs that I love so much in the morning.
I'll tell you this.
These days.
I'll say this. I'll chime in on this egg subject real quick. I'll be honest with you. I haven't bought eggs in like 3 months. So I went into the grocery store the other day before this story came about, and I bought eggs. And I remember thinking I had like budgeted for how much my shopping list was going to be. And I was, to my surprise, eggs were like way more expensive than I thought they were going to be. So
you thought the news is just lying to you?
Yeah, now I think this is fake news. Because you guys are not at my grocery store, I'll tell you this. Not at my grocery store. Did not hit my grocery store.
I promise everybody we will talk crypto and stock markets, but we got to keep this conversation for a second. Caleb, how are egg prices where you are? Have you bought any eggs here recently?
Yeah, I buy eggs frequently. I don't check the price though, so I'm not sure what they're going for actually. The weird thing about Europe in general, I've been here now for 2 years.
He's too successful in the markets to care about prices of eggs.
Excuse me. The weird thing about Europe is they don't sell eggs by the dozen. They sell them in tens.
Okay. Oh.
So even if I did know the price off the top of my head, I'd have to adjust them 20% for the, it's like.
And that right there is why they deserve 200% tariffs on alcohol, just because they don't count dozens. No, I was going to say, as far as eggs, I was noticing, obviously if you buy like free range organic eggs, I don't know if anyone here watching buys free range organic eggs because you want to be healthy. Those obviously are going to be way more expensive. You know what's absolutely nuts? My wife buys those eggs, but I was in the store the other day looking as well. At least last week, and the prices are coming down. Last week, there was a better deal per dozen of eggs for local farms, organic, grass free range eggs than it was to buy the crappy eggs in Publix. So absolutely crazy what the egg prices are doing. That being said, enough eggs. We will read the super chat here in just a minute. But first, As always, we got to start off with our minute-long news rundown with T-Shroom. T-Shroom, what are the big headlines everyone needs to know about today? Take it away.
Absolutely. Well, the first thing we were talking about it is go and subscribe to the Investing Bros on Twitter. You're going to love it. We got all the best news, the greatest news on that X account. Egg prices in the United States do hit 3-month lows. That's going to be on average. So they may not be lower where you are, but on average, they are. Secretary of Commerce Howard Lutnick says President Trump's goal is to eliminate taxes for anyone earning less than $150,000 per year. Bros, let me know right now in the comments, do you make less than $150,000 per year? I'm curious, and I want to know. Today, the Senate Banking Committee advanced the Genius Act, distinct from the House Stable Act, establishing a federal stablecoin licensing framework. In addition, 5 Democrats actually supported enhancing the U.S.'s crypto regulation that aligns with Trump's pro-crypto agenda, a pretty big step for stablecoins. Also, we've got some Russian headlines here. Russia plays hardball over a ceasefire deal as the U.S. officials head to Moscow. This is the way that CNBC wrote the headline. We'll be seeing how that story unfolds maybe as soon as the end of this live stream. So I'll keep my eyes glued to these pertinent feeds. President Trump's family is in talks to acquire stake in Binance US, per the Wall Street Journal, shortly after Binance's founder, CZ, is urging President Trump's administration to grant him a pardon. Very interesting timing there from the two titans of crypto that are emerging. Cool down in inflation, day 2. You got to love it if you are a fan of data. February PPI inflation hit 3.2%, which is below expectations of 3.3%. Meanwhile, the core PPI similarly performed 3.4, beating expectations of 3.6. We want these numbers to get smaller. They're getting smaller. That is progress. Robinhood, US, has now listed Pengu and Peanut, as well as Popcat. Why they listed these, I'm not sure, but they did. And so you can go and buy and sell that on Robinhood if that's what you want to do. Mostly this is a big news because if you're hodlers of these 3 coins, that just opened up some new liquidity for you. Very, very bullish. Finally here, a little bit of the State of the Union on the current reserve race. This is the Bitcoin reserve race at the state level. Arizona, just 1 vote away from enacting a Bitcoin reserve, and Texas and New Hampshire and Oklahoma not too far behind. Tim, that is going to do it for our headlines. I want to take this moment, though, as we wrap up the news, to tell you all about Limits Express. Walmart and Amazon are making billions and billions of dollars every year, and many people have actually taken the opportunity to open up a shop on Amazon.com and Walmart.com, and they're taking part in the huge opportunity of making money through these giant firms. Now, you can do the same thing too, but you don't have to go through all the stress of trying to source the goods that you might sell on Amazon or Walmart. We have partnered with Limits Express, and they will do all the work to help you sell and make money on Amazon and Walmart.com. It's completely legit. Make a reservation in the Calendly link below with Limits Express to get your shop set up today and ask questions about that amazing opportunity for selling and making money on Amazon and Walmart.com. We just set up our shop. More news on that coming later next week. And we don't know exactly what the product's going to be that we sell because Limits Express, they do all the work for you to help you find the best product that's going to sell. You don't care what product it is. If it's deodorant, squeaky toys, if it's a wristwatch, a webcam, whatever it is, it doesn't matter. People are buying billions of dollars worth of stuff on Amazon and Walmart, and you can take part in getting a little bit of that income by seizing the opportunity with Limits Express. Go down into the link below. It's a Calendly link, and book your meeting with Kyle and tell him that the Investing Bros sent you. You will not be sorry. Go down into the link below in the description, Limits Express, to book your private free consultation with Kyle to ask questions about setting up your Amazon and Walmart shop today. Tim, that is the news, and that is the big opportunity at Limits Express. Thank you for sponsoring this video and making it possible.
Let's get into crypto talk, everybody. If you guys are excited to get into the charts, we're going to be talking with Caleb here in just a couple of minutes. I will keep the technicals a little shorter today, but it's because we have such amazing conversation about some big macro events we need to be focused on. But let's go take a look at the Bitcoin charts here. What is happening after a sustained last couple of days of bullish momentum? Today, we have opened up back in the bearish zone. And some people say the red. On my charts, it's the blue because I like the white and blue candles. This is not necessarily crazy surprising in my opinion. We did hit some levels of resistance here earlier. Today we came up here towards 84,300. Some highs we hit just a little bit ago back on the 10th. Where I told our group this morning, look for a pullback, was the 2-hour smart trail. And even though it's too soon to confirm this bottom is in, I'm going to show you a level slightly lower that could be interesting to sustain a bigger move to the upside. I did tell our group I was going to add to my long position. Some of you will remember we entered a long a couple of days ago back here at 77,112. Okay, didn't hit the bottom perfectly, but got pretty stinking close. I just added today to my position at $80,000, and at the moment, it's looking like a nice little bounce could be happening. One thing I will say though, there's something that you guys should be aware of. If we drop a little bit lower, another support level before we would say that this is a bad move on the shorter time frames, golden pocket is coming in down here on 79,300. So if we start to move a little bit lower, keep an eye on that. If we lose $79,000, however, and cannot close candles above that level, all of a sudden, we're talking about the two different levels that we've been tracking last couple of days. One of them to the upside, $92,000. The other to the downside, $74,000. The question is, which one comes first? If we lose $79,000, all of a sudden, the probability of $74K being hit first becomes increasingly likely. Otherwise, right now, there still are signs on larger time frames like the 4-hour chart, on the daily chart, on the 2-daily chart, that longer time frames have bullish divergence. They want to make a bounce back up here using the Luxalgo indicator back towards resistance around $92,000. That is what we are still tracking at the moment. We'll get Caleb's take on that here in just a little bit. Really quickly, we will not be doing a live trading setup today. We did do a couple yesterday. Wanted to check in really quickly on our trade setups. Now, if you entered the first one, you could have exited in profit if you used a certain strategy. But today, with this recent rally, or recent dip, wrong word there, we did just barely enter into that longer time frame trade setup. Again, if you haven't entered yet, you're still in a very good spot. If you want to look at that ONDO setup, this is all based off of a bullish 4-hour with a buy signal coming in and also having some take profit levels up here back towards 96 cents. On this shorter time frame, if anyone is wondering, we should have talked about this yesterday. I'm going to give you guys a free trading advice right now when you're entering, especially scalp trades. But whenever you get a good entry like we had last night, again, we set this up, again, wick down, hit the support level we talked about, and bounce back up. Did we get all the way back to our take profit from yesterday's short-term trade? No, we did not. But one of my favorite strategies I use when trading is whenever you get a successful bounce on your entry position, you immediately take that stop loss level, okay? So at the moment, yesterday, we set up the stop loss at 82.6 cents. You immediately move it up into profit. You find a significant support level after you've broken out, and then you put it up there. That way, even if the trade turns around on you, you still exit in profit. So in case anyone's saying, Tim, that first trade, I ended up losing out, I apologize to everybody. I should have specified a critical strategy that we use in our VIP trading group, and that is the minute you're in profit, you raise that stop loss up so that you never lose. This was a successful trade for our VIP traders, but for some of you guys, I understand that should be something you're watching right now on this larger trade should you enter it. Again, I wouldn't put us in a camp just yet on the 4-hour chart to say it's time to raise the stop loss, but if we start to turn one white candle on the 4-hour chart, I all of a sudden would take my stop loss, currently sitting at 76.5 cents. I will move that up into profit, and then no matter what, whether we hit the level or whether we go lower, I will enter in a profit on my trade. That is one of the key details about trading. I was actually talking with somebody earlier today about this. A lot of people like to submit trades and ask me, Tim, what do you think about this trade setup? What do you think about my entry right here and my take profit right here? And I told someone earlier today, I said, wait, where's your stop loss? The single most important aspect of trading, we're not talking about long-term investing here. I'm talking about trading for a second, and then we're talking about long-term investing in a second. The number one detail of any trader should be, where is your stop loss? You can win a lot of money. You can lose a lot of money. What separates winners and losers in the trading game is risk management. And there's not really a tool better than stop losses to protect your hard-earned money. So if we in the future set up more trades, I will make sure to specify that as well, what I'm looking at to raise my stop loss up. But at the moment, that second and longer ONDO trade does look like it's on its way to the upside. We'll come back to charts here in a little bit. Let's go back to our split screen, though, here with Caleb. And I want to get his take overall. Levels, maybe you haven't been watching our content here recently. I'm watching right now. There's some buy signals on some intermediate time frames calling for like $91,000, $92,000 back to the upside, but we still have like the 2 weekly chart. I see some things saying that 74,000 or maybe even lower towards 65K are still on the radar. Now, I'm speaking a lot as a trader. I want to kind of transition that to you, who is a more macro long-term investor. You have your particular times you want to buy for long-term. Then if you see moments of weakness, you want to get out of the markets. How are you analyzing Bitcoin right now? What are the significant levels, in your opinion, that are keeping us bullish, but if they're lost, all of a sudden Bitcoin is in danger of truly entering a bear market?
Yeah, I mean, look, I definitely tend to approach things from more of a medium to long-term perspective, but I also trade very aggressively on the short-term side of things, and so I've been stopped out of a lot of positions over the past several weeks in terms of the short-term altcoin trading account. So that's basically all in cash right now. And I'm not also looking to really de-risk a significant portion at all of either my equities or my Bitcoin, right? And so as we start to think a little bit here about what's been taking place, as we look at the Bitcoin chart, whatever the case is, we've already lost some really key levels, right? If you want to go here to the chart that I'm looking at right now, this is Bitcoin and its short-term holder realized price. We've already fallen below that level, right? And what is the short-term holder realized price measuring? This is the rolling 155-day cost basis of all Bitcoin that have been transacted. And so when we're trading below that level, it's typically not a good sign. Bull markets are historically characterized by price trading above an upward sloping short-term holder realized price. And so right now, we're neither trading above the short-term holder realized price, and the short-term holder realized price, is also downward sloping, right? So this is a key level of concern for me right here, right now. That level currently is trading at 91,100. So if we get back to there, you can already notice we've already kind of flipped it into resistance, and now we're making new short-term lows, right? That's a bit of a concern. If we look more at something like the 200-day moving average cloud, combining the EMA in blue and the SMA in red, we've now fallen below that level as well. We've had 5 consecutive daily closes below that range now. And in fact, today's price action to me is actually a really big red flag as far as I'm concerned. Not only are we flipping this low daily close into resistance yesterday and today, but we're now using that 200-day moving average cloud as resistance. You'll notice I have 2 kind of dotted lines on my chart right here. The first one is at 78,000, basically 500. The reason why I have that highlighted as an alert is because if we fall below that range, that could potentially put us at risk for the lowest daily close going back to early/mid-November, and basically signal a lower low here once again. And after getting rejected on that 200-day moving average cloud, that's a sign of concern for me. The other alert that I have is for 85,580. And that would be a very important reclaim for us because it would put us back above the 200-day moving average cloud, right? And so for me right now, I kind of feel like we're in a bit of no man's land here after we've already experienced this 24% drawdown. I also just want to say, right, I mean, a 24% drawdown for Bitcoin is something that is normal and it's par for the course within bull markets. But given the fact that we're having these breakdowns, given the fact that some of these macro conditions are unfolding the way that they are, I think right now is probably the most concerned that I've been now in more than a year for sure. So there's a lot of red flags. There's a lot of yellow lights, if you will, if you want to use a traffic light kind of analogy here. And so, is this the time to abandon the market? Absolutely not, in my opinion. I think we're probably due for one of those counter trend rallies here back into the 90s. So I'm certainly not de-risking here, but I'm definitely open for more downside as well.
Yeah. And then I think it is something I was looking at that same chart and that analysis, the 200. I like how you use the clouds. Like you're using both the 200 SMA and EMA. I normally am looking at the SMA, but on that topic, I want to kind of ask you, because even this bull market, we've seen this 200 SMA and therefore the EMA is going to be in a similar camp, kind of be played with, and kind of get your take on this one. Go to my screen here, Smay. I'm out here. The purple line on my chart is going to represent the 200 SMA. Caleb is 100% right. That was actually a very interesting resistance level today. We cannot close yesterday above that 200 SMA, and then we start the day off today by shooting to the downside. We actually had a quick rally above with that wick, shot to the downside. Okay, and historically, I think the 200 SMA is going to be a major level of support and resistance, telling us, are we bullish, are we bearish? But even in this bull market, I just want to get your take on this one. So far, last summer, we had the time back here in July where we lost to 200 for a couple of days. You can see as we zoom in on the candles, we came back up, and here around July 10th, we rejected, we fell back down, we came back above, then we fell back below, turned it into resistance again. You see this, like, just a long summer of flirting with it, going down below it, treating it as resistance pretty much for almost nonstop between August and then here in October. But of course, the bull market didn't end. And that wasn't the first time this bull market we'd gotten below the 200. Of course, you go back here to the summer of 2023. We spent between August and October back below that level as well. And I could keep going back and show in other bull markets, there's times we lose the 200. But when you look at that, and I think, again, it's fair to say that this is a reason to be concerned because that 200 is so important. Does that give you, like, are you seeing something different about this time than the summer of 2024 or the summer of 2023 that means that this is more significant? Or are we in kind of more of a watch and wait mode, in your opinion?
So the beautiful thing about something like a moving average, whether you're using the simple or the exponential, is it's a dynamic indicator. Price is going to be trading around that level, above it, below it, whatever the case is. So we can be dynamic as that dynamic relationship also changes. The one thing I know for a fact, and that I know that we'll all agree on, is that uptrends are typically characterized by the price of an asset trading above its moving average. Pick its 20-day, its 50-day, its 100-day, its 200-day, whichever one you want to use. And so when we're objectively falling below those key moving averages, that's now the sign of a downtrend. That's the sign of a bear market. So when we're seeing that evidence now take place, we can acknowledge that price can get back above that level. That's, again, why I have an alert set for price getting back above that 200-day moving average cloud. Because if we get above it, that would be a bullish sign, right? Yeah. And if you actually go back through history, you can develop a really easy trading strategy. I talk about this with the premium members of Cubic Analytics all the time. You can buy an asset when it breaks above its 200-day moving average cloud, have a stop loss below it, and then completely exit out of that position if we fall back below the 200-day moving average cloud. You can get chopped up in and out of that trade, because what you know for a fact is if you're going to get in above its 200-day moving average, again, that's a sign of an uptrend. So if we get that follow through and price keeps going up, you're going to be in that trade. But if you get stopped out below the 200-day moving average, you're ensuring that you're going to be out of a downtrend, right? And I think that's really powerful. Yeah. So yes, we've seen plenty of evidence over the course of this bull market where we've fallen below that 200-day moving average. Here's the thing though, if you just waited and you were patient until we got back above that cloud to get super bullish again, you ensured that you were successful in that upward momentum thrust, right? So we can objectively acknowledge the fact that losing the cloud is bearish. That's a sign of a downtrend. But we can also be objective and recognize that we can get back above that level. And if and when we do, that would be objectively bullish. So, it just requires a little bit of nuance.
Yeah, and it is something we were talking about just yesterday on our show, the if-then statements. Exactly. Everyone wants to treat us analysts like we have this crystal ball, and then when we get something wrong, it's like we lied to them or something. We're always analyzing these if-then statements. So I want to ask you one more, and then we'll move on from Bitcoin. I actually want to talk about the stock market, what you're seeing over there, and then we'll get into some of these conversations with tariffs and the economy and the inflation. So let's pretend for a second, if-then statement. If Bitcoin cannot reclaim this 200 cloud, this 200 moving average cloud, what levels are you looking at? If this truly is a bear market, are you looking at 30,000? Do you think the floor being a lot higher than that? Do you think there's a chance we revisit 15K? What are your if-then statements about this is a bear market? We don't regain bullish momentum above the 200. How low could we go?
Well, I like to take things one step at a time, right? So if then. So if we lose this level, then we'll likely go to this next level. If we lose that level, then we'll go to the next level, right?
Yeah.
So yeah, exactly like you said. I think for me right now, one of the key lines in the sand is going to be from a structural perspective, looking at those 2021 all-time highs. It's no secret. Basically having an opportunity for a breakout retest rebound setup on that level. So that's basically a range between 69,000 and 74K, right? So let's use those early 2024 highs. Let's use the late 2021 highs. That for me would be a very key kind of line in the sand. Another level that we can also look at, let me pull up the chart on this, is looking at the all-time index for Bitcoin with its 200-week moving average cloud. And we could see, generally speaking, 200 weeks is just 4 years, right? And the 200-week moving average cloud, I think, is one of the most powerful indicators you can use as a long-term investor. It works for the S&P 500, it works for the NASDAQ 100, it works for Bitcoin, so on and so forth. And so we can generally see, aside from the 2022 bear market, this 4-year moving average was perfect support as an opportunity for long-term buyers, right? Obviously, we've had some wicks kind of below this level, both in 2015 and also during COVID in 2020. It was very unique to see price break below that level in 2022 and actually flip it into resistance. This was a very bearish retest. And I remember highlighting that in real time. And then we made new lows. And then if you just waited to get back above that level, you would have been a buyer for Bitcoin at 25,000. Use this as support here, 25,000, 26,000, and been enjoying this bull market. And so if we're going to continue to use this 4-year trend as a dynamic support zone, which is entirely possible, that range gets us down to basically 45,000 to 49,000. So as we try to think about, bear market lows, if we are going to endure, a lengthy period here of a downtrend, where would my target be for that downtrend? It would be that 200-week moving average, which is basically about 40% downside from where we're trading right now for Bitcoin.
I love it. Good levels there to watch. I would definitely, if I saw 45,000, I would be buying some Bitcoin. That would be very much my case. Let's change topics here for a second. And we spent a lot of time on the channel talking crypto, but we do want to talk more stocks as well. And I know that's something, Caleb, before you got heavily into crypto, stocks was your playground. What are you seeing going on over there? And this is significant for crypto because I do think there's a day where at least Bitcoin, if not the rest of crypto space, kind of has its own identity and moves on. But we're definitely in a stage right now where crypto is still being viewed as a risky asset. Therefore, it's going to follow risk assets. It's going to follow the stock market. People in the stock market are beginning to kind of freak out. I didn't get to tell the story yesterday, but I was playing golf yesterday morning before the show, and I had a random partner, and they were asking me like, "Hey, like, what do you do for a living?" And I was explaining to them, I run a YouTube channel, and we teach people about the crypto markets and the stock markets, and how to understand the charts and when to buy and when to sell. And the guy, he chuckled. He's like, "Oh, don't talk about the stock market right now." And it was just that overall mood that stock market guys, like crypto's used to pullbacks, right? Crypto enthusiasts, we understand the volatility. Stock guys are down 10% and they're feeling the pain. They don't want to talk about it, right? But it's only down 10%. When you look at the stock market right now, what are you seeing? What are the levels you're watching that are significant there? Are you more bullish, less bullish? Where are you feeling about the markets as a whole over in the stock world?
Yeah, so a few weeks ago, I announced that I was pausing purchases in my long-term stock market account, and I was selling recently purchased stocks. And so I basically de-risked a pretty sizable portion of the portfolio from that standpoint. As we look at kind of those key indicators for stocks, I'm seeing even more worrisome signs there in the stock market than I am for something like Bitcoin. If we look at these intermarket relationships, looking at discretionary stocks versus consumer staples, basically looking at a risk-on versus risk-off ratio, looks terrible. If we look at U.S. stocks relative to treasuries, also just looks terrible, complete bloodbath. And, to your point, you acknowledge, right, that the S&P 500 is basically only down about 10% from the all-time highs. The median stock in the S&P 500 is currently in an 18% drawdown. So there's a lot of pain that is happening under the hood here. And, a lot of the strength at the beginning of this year and at the end of 2024 was really primarily being located within the mega cap tech group, right? The Magnificent Seven, what I refer to as the MVPs of the market. And so when the average stock within the S&P 500 did not make new all-time highs in 2025, even though the S&P 500 itself did, right? Even though stocks like Meta, Amazon, and Google were all performing extremely well at the start of the year. And so unequivocally, there's been a lot of pain, right? And in particular, we've seen a lot of the unwind come out of kind of the speculative growth stocks, the ARC stocks, the software stocks, the unprofitable tech, whatever you want to call them, right? But that kind of speculative group of technology stocks has really been hit hard. I think those are the stocks that do the best during a bull market. And so investors get particularly focused in that group of stocks. And so when those are the ones getting hurt the most, I think that's really why we're seeing sentiment be so bad, even though, as you pointed out, the S&P 500 is only down 10%. Let's also contextualize this. The Russell 2000 is down more than 19% from its all-time highs. So the drawdown for the 2,000 stocks in the United States stock market are down already basically in bear market territory, right? So again, this just kind of highlights the fact that there's been a lot more pain under the hood than we would normally just see kind of at a surface level from the index perspective.
Right. Yeah, and that makes sense. That makes sense. I mean, for the most part, and I think you gave a lot of things there. I know I was listening to somebody talk about that. They said like, yeah, like the S&P 500 is only down roughly 10%, but it's because the Magnificent Seven are actually holding up kind of well. Like you said, if you look at almost everything else in that S&P 500, it's bleeding a whole lot more. How low do you think it could get to? Some trajectories that I'm kind of watching, again, that 20%, if you show my screen here, Smay, 20% seems to be the number a lot of people in the stock world like to say, all right, that is the bear market trigger right there. If we got a 20% drop, like I said, only down about 10% right now. If we got a 20% drop, we're talking about down here towards 4,900. And of course, you guys know I'm a big fan of the Lux Algo indicators. Use them every single day. Coincidentally, if you look at the smart trail for the monthly chart, we're going way, way out here on the monthly chart. That would keep us right in that range of staying slightly above, but in that 20% camp, right there around back towards 5,000, 4,900. Do you think that is the significant level of support? Again, kind of like Bitcoin, you kind of showed some movements down towards 45,000. Let's get that if-then statement continuation going here. If the S&P 500 keeps falling, what to you looks like the next significant floor? Is there something between us and 5,000? Does 5,000 look about the right level? What are you thinking there?
So go to my chart here. I want to start again. I just highlighted the significance of that 200-week moving average for Bitcoin, but I alluded to the fact that it's also super effective for the S&P 500, right? So perfect support here in mid-2011, perfect support here in 2016, perfect support in 2018. Here were the COVID lows, and here were the 2022 lows, double retest on the 200-week moving average cloud, right? And so if we use that same level as kind of a max pain scenario, that basically gets us to 4,700 for the S&P, which I think is about 15.9%. Yeah, it's about 15% away, right? So we're already in a 10% drawdown, another 15%. That basically gets us, let's just use basic back of the envelope math here, 25% drawdown at the index level for the S&P. You'll also notice, what would that do? What would that allow for? It would basically allow for a breakout retest rebound setup on the former all-time highs from 2021 and 2022, which again would be a very bullish scenario for long-term investors. Obviously, this environment right here, the past 4 weeks in particular, have been terrible. This feels really bad, right? I'm experiencing it firsthand myself, so I can really sympathize with people who are feeling a lot of concern right now. But I'll tell you what, if and when we get down there, I'm draining all of my checking accounts and I'm putting it into the stock market. I'm putting it into Bitcoin, so on and so forth, because that right there is going to be a significant long-term buying opportunity. It would feel terrible for us to get down there. But in my opinion, if you're a long-term investor, particularly if you're under the age of 40, this is the environment here where you're funding your Roth IRA. This is where you're funding these different retirement accounts and you're just zooming out, right? We've been in this raging bull market now over the course of the past almost 3 years, essentially, right? Basically been 2.5 years of a raging bull market. And so in those bull markets, we can get super aggressive. We can be very short-term focused. And as we're starting to lose momentum, this is where we really need to remind ourselves about long-term investing principles and looking at these drawdowns as significant buying opportunities. Because think about this, I was on a phone call with a family member recently, and I was telling them, objectively, it has never been a good idea to sell US stocks because over the long run, they've done this, right? So objectively, it's never been a good idea to sell US stocks because if you just held them, whether it took 5 years, 10 years, whatever the case is, you've been at new all-time highs. And so, of course, we can go through these drawdowns that don't feel good. But I'm telling you right now, if you were a buyer of the S&P 500 throughout 2008, going into 2009, and in 2010, you're up magnitudes, right? That's where the big significant gains are really made. And so if we're getting that opportunity in this market environment, let's let that happen. It's not going to feel good, but sometimes you just need to take your medicine, and we just need to remind ourselves about these long-term investing principles.
That sounds awesome. Well, let's transition here. Let's get away from charts for a second. They're probably going to come back up again due to the nature of what we're going to talk about. Charts are probably going to come back into the conversation, but let's refocus back into some macroeconomics. Again, I was telling Caleb right before we went live. I said I always love getting his take on things because T. Shum and I will give you our opinions. We'll kind of focus on the news stories that we think are the most significant, right? But sometimes I get to hear Caleb, and he comes at it from such a different position, and he says things I'm like, I never even thought about those details before. So people have heard our takes. We'll probably still give some of them, but I'm really interested in your thoughts on everything happening right now. Something big we talked about yesterday, and I'm sorry, I got something in my eyes, so something is itchy. Give me just a second. Goodness gracious. Something happened now it's like within the last, what would that be? 36 hours, right? Last 36 hours, we got some great news on 3 different fronts, right? Big fears facing the world right now. Number one, are we going to see the beginning of World War III, what's happening with Russia and Ukraine? Of course, Ukraine, the one that is probably the more difficult one to negotiate with, has agreed to ceasefire. We're going to talk about the Russia side of that here in a second, but that was a good news for kind of like a watering down on maybe we can slow down this progression towards World War III. Another major fear that we were looking at here in the markets was, will this trade war, especially the one between America and Canada, continue to escalate? Well, all of a sudden, after days of kind of threatening the United States, the Canadian Prime Minister came out and said, we're willing to negotiate with President Trump to end all the tariffs between Canada and the United States. So that was a nice dousing of some flames as well. And of course, there's the news about inflation. Are we going to get any quantitative easing happening this year? Well, CPI and PPI numbers in the last 24 hours have both suggested that inflation is coming down, which could allow for Powell and the Fed to cut rates sooner and more aggressively than some maybe anticipated, right? So 3 great pieces of news. And we're going to talk about the biggest details here. Let's start off with maybe some of your thoughts going on. And Tishan, bring up the news again about the update from Russia. Do you have an opinion right now on that political aspect of what's happening in Russia and Ukraine, the effect it has on the markets? Maybe you don't even need to give us your expectations of what you think is going to happen, but maybe more like, how big of a deal is this actually the stock market, or do you see it as being kind of a smoke and mirror issue and it doesn't play a major role there?
Yeah, look, I'm not a geopolitical strategist, right? So I don't have any comments on that. I like to stay in my lane. But objectively, I think that we would agree that if we actually get ceasefire agreements or a peace deal between Russia and Ukraine, that would unequivocally take a significant risk out of the market, right? And so one thing that the market loves is the absence of risk. And so, asset prices should do well in that environment. So given the news that we've been having, we should be seeing asset prices perform better in this market environment, particularly because of the other catalysts that you had also mentioned from a news standpoint. And so when the market is failing to rally on objectively bullish news, that's a cause for concern, right? Because what is the market? The market is just a forward-looking pricing mechanism. And so if those dynamics are not receiving a bullish follow-through in the market, what else is the market concerned about that we're not paying attention to? And I don't have the answer for that, but that's the question that kind of comes to my mind, right? And so clearly, to some degree, the market right now is not caring enough about those dynamics to rally substantially or to sustain a rally, right? Just the simple fact that we got really encouraging CPI data yesterday, the market performed really well. And then when we look at the PPI data again this morning, I thought it was fantastic, and we're not seeing the rally sustain, right? So again, the market just doesn't care. It's concerned about other things. What those things are, I don't know what they are. I don't know what the market is concerned about. I won't pretend to be smart enough to know what the market is concerned about. But the one thing that I know for a fact is we are not rallying on objectively bullish news. And it's been that way for quite a few weeks now, if not more than a few months, right? I mean, just look at the crypto market, all of the objectively good news that we've been seeing coming out of the SEC, dropping their cases, Trump getting elected, the inauguration, announcing the strategic Bitcoin reserve, adding all these various cryptocurrencies like Ripple, Cardano, Ethereum to such a reserve. We're not seeing bullish follow through sustain in the markets. And objectively, that's a bearish sign.
Yeah, before we go in here, because I want to discuss the Russia thing with T-Shim in a second, but I love what you're getting at here. And I always forget, because we get to see you here once in a while. I need to get you back on very regularly. Who here in chat would love to get Caleb Franzen on at least once a month consistently? I know I'm in that camp as well. Put a 1 in chat if you guys want Caleb Franzen on more frequently. Where do you sit? It's something I really am big on, and I'm very okay if you disagree with this and if you explain why you think I'm wrong here. But I'm really big on this is a market that is heavily manipulated. I mean, even everything you just went through it there, because you're absolutely right. Look at the bullish headlines coming out, and yet the markets are not responding bullish. They might respond bullish for a day or two, but then they'll just turn around, and there's this like growing unrest in the crypto community that all of a sudden now good news equals bad and bad news equals bad. And I think Kabesi Letter put it great in one of his tweets. He's like, here's your formula for how to invest in crypto. Good news, sell. Bad news, sell. Neutral news, sell. Amazing news, sell. It's just like that's what people are feeling right now. I look at this and I'm looking at the long-term trajectory of what this news actually means for the markets. And I'm sitting here saying, man, this to me reeks of the big boys manipulating prices because they know the long-term trajectory of how much money they can make. And they want to buy as cheap as possible, and they want to discourage retail investors out. That's kind of how I see it. Do you see kind of in similar light to that, or are you more sitting here saying, no, we're seeing all this good news, and yet the prices are going down? That, to me, spells and kind of tells me there's a really bad thing on the way. There's really bearish pressure on the way. Where are you kind of sitting on that manipulation versus, no, this is just really bearish kind of front?
Yeah, look, I've been an investor for more than 11 years now. And one of the things that I've learned is to never play the manipulation boogeyman game, right? Because, for example, you could have made the case that in 2023 and in 2024, we had a lot of bad news, right? Inflation was still high. The Fed was still tightening. The SEC was putting Wells notices on all these different companies. And whether the good news was good or bad, prices were going up. So are we also going to say that that was manipulation to the upside? Because if we're going to say it's only manipulation to the downside, we're just being extremely biased, right?
If you don't mind me interrupting there, I don't know if you're asking seriously or facetiously. I would tell you, in my personal opinion, I would say yes to the question you just asked. Like that's something I tell people all the time. Everyone talks about manipulation in the negative route. I like to think about manipulation in the positive route. I posted a video on X the other day. It was a video of a guy talking about JP Morgan and specifically the way they manipulated Bitcoin to the upside. And what he did was JB Diamond, the CEO, he put out a notice to all of his workers telling them, if you buy Bitcoin, you will be fired, right? You hear that news, you see that headline. Of course, that should be bearish about Bitcoin. But yet over the next couple of weeks, Bitcoin's price increased. And then it came out that the company itself, JP Morgan, had been buying Bitcoin. To me, that is positive manipulation, not positive for retail investors because they got screwed selling a bottom thinking that JP Morgan was saying it was all terrible. All the while, it was you don't buy it so that I can buy the dip. And then when we can raise price up, I get the rewards and profit. You don't. So in my personal belief system and how I trade the markets, I think people only ever focus on the word manipulation and think about price go down, when in reality, the same manipulation I can use if I control the media to get you to buy the top so that I can sell on you. At the same time, I can use manipulation to get you to sell the bottom so that I can buy that cheap crypto or cheap asset and send it back to the upside. So that's kind of like where I'm sitting on it. Do you have a kind of a response to that or a thought there? Or, yeah, throw it back over to you.
Yeah, first, if that allegation is true, then what they were doing was manipulating the price to go down so that they could buy it.
Temporarily, yes, yeah.
Right, so they weren't manipulating the price up, they were manipulating it down. So,
but again,
it's different than what I was saying.
The day that they put the news out there negative, the price goes up, right? Because they bought such large volume and such bulk, it sent the price back to the upside. They wanted cheap, like that's what it was. They wanted cheap crypto. They didn't want anyone else to compete with them to fill those bags. Either way, I think we're going to get into semantics and we keep going. Either way, I think what's very important, I do think sometimes, I would be quick to say, oh, that's a manipulation move, when in reality, it could just be a deciding factor. I think there's moments where there's manipulation heavily. There's moments where there's not manipulation heavily, but people want to call it that. I'm very open to the fact that sometimes I might get it wrong with how I detail that. Let's get in, though, for a second here, and maybe you have a take, or maybe you don't. For anyone who did not join in the intro, we do have some breaking news today on the Russia-Ukraine front that's interesting. It's really neither bullish nor bearish. It nearly doesn't tell us, are we getting closer towards peace or are we getting back into war? But it is information that people need to know about and potentially what the future could look like in that tension and what the crypto markets could do. T-Shrim, can we go back to that story? What are the details here with Russia agreeing to or not agreeing to ceasefire deals? You are muted, my friend.
The latest way that CNBC is illustrating the situation is by saying this: Putin wants direct U.S. talks before Ukraine's ceasefire, but says he is open to deal in principle. So that's much more optimistic than what we were seeing this morning, which is essentially this: there was context that emerged from January. With this quotation from Putin, if we're talking about any peace process, there should not be processes involving truce for a week, for 2 weeks, or a year, so that NATO countries can just rearm and stock up on new ammunition. We need conditions for long-term, sustainable, and lasting peace, which provides equal security for all participants in this difficult process. Again, that was from Putin in January, not today, but from January. That quotation was kind of being leaned on to make the argument that we would not see Putin come to the table for. But now, we're seeing headlines more like this to the live minute. So this is optimistic. Kind of dropping back and seeing the broader context is that there was a ceasefire agreement, at least from the Ukrainian side, that was reached in Saudi Arabia. We covered this yesterday, and Marco Rubio and others are now flying to Moscow to get the other side to sign on to that ceasefire as well. Yeah. This is objectively bullish. This should be bullish and should bring some more confidence to the markets if this ceasefire were to be reached. But right now, it's being illustrated as Russia's playing hardball, right? They know that they have a lot of power. They have a lot of leverage in this moment. And so, there may be a few last-minute demands that they might make to play hardball.
Yeah, and I think, hardball is one way to put it. I have a slightly different take, and it's going to make me almost sound like I'm a Russian sympathizer. Like, I'm not, right? I by no means think Putin is this great human being who's the staple of moral and ethical decision-making. But I think there's some logical thoughts here, and kind of things that I've read on it is that he really wants a peace deal, but he wants one in good faith. I think what he fears right now, and let me know in the comments what your take is on the processing information you've gotten, what he is afraid of, and it's very logical. He's afraid that this is an excuse and a reason for Ukraine to get to reload, build up some military backing, and then not actually come to the table offering any peace. They're just re-readying themselves to go back into war. That is what he's afraid of. And I'm not going to be surprised if one of the details he comes out and says, I will agree to this ceasefire if both the United States and Europe cease all funding of Ukraine. And you really can't get upset at him for having that kind of thought process. That is kind of logical. I want peace. I want it to happen. But if this is not a ceasefire in good faith, if you're not actually going to come to the table and discuss what a deal can look like, and this is simply hey, you guys stop attacking us so that we can get our footing and reload up and then come at you harder, I would understand why he would not want to agree to the ceasefire. That being said, no matter what your thoughts are, and if you like what he's doing, don't like what he's doing, if you think there's going to be one or not, the ceasefire is a temporary bullish plug on the markets that are avoiding a World War III. If it does not happen, all of a sudden, you're going to be looking at this and saying, all right, well, we didn't get that bullish headline. World War III is absolutely still on the table. Russia and Ukraine are going to go right back at it. And the sadness of it all, whether you side more with what's happening on the Ukraine side or the Russia side, I'm not here to judge anybody on who they think is right, who they think is wrong. I'll tell you what's wrong is that millions of Russians and Ukrainians are dying. We need to get closer towards a peace deal, not even just for the crypto and stock markets, but for livelihood in general. Let me know in chat what you guys think about that. That's kind of the first issue there. Again, the fear of World War III. Let's get into, I know Caleb was talking about this a little bit more. Let's get into the tariff and inflation side of it all. The fresh news coming up today, I'll kind of highlight this. We're already at 3:48, and I still feel like we have a whole lot to talk about here today to break it down. I want Caleb's take on this. It looks like potentially Canada and America's trade wars are softening, right? And that's going to be a good news for the markets long-term. Tariffs that are going to cause inflation will bring back down. Prices will drop. People will be more confident, have more money to put into the markets. That's going to be good. But all of a sudden, today, we're getting this spike where Donald Trump is going to be putting tariffs on Europe, specifically in the way of whiskey. If you have any details to add to that, T-Shum, feel free to take that away. But I want to throw it to you guys and get your takes on that as well. And maybe start off with Caleb. But T-Shum, anything to add to that? Did I get that accurate? Is there details I'm missing there?
Yeah, that's right. In short, Europeans don't import a whole lot from the United States. What they do import is things that can only be made in the United States, which is Kentucky whiskey. If it's not from Kentucky, it's not whiskey, right? Or at least it's not bourbon. So
starting off, okay, sorry, didn't want to interrupt
so
you.
yeah, there's obviously other goods that are imported to Europe from the United States, but that's the one that really matters and is going to get the headlines. Also Harley Davidson, so other brands that are unique to being exported from the United States.
Yeah. So Caleb, first of all, do you partake in the American whiskey even whilst you're living in Europe? Have your prices got more expensive on you just yet? They wouldn't, because it's just happening today. Yeah. What are your thoughts about this headline when you see it?
No, so I mean, I don't drink too much, so I wouldn't necessarily be feeling the pain of that 200% whiskey tariff. But look, I think just generally, like, thinking about tariffs, right? First of all, everyone knew Trump was running on a tariff policy going into the election and going into the inauguration, right? So, to a degree, a lot of this, I think, has already been priced in. And in a lot of ways, I think the market has just been looking for a reason to kind of sell off, right? And so it's like, okay, these tariffs are here. Now we have a fundamental justification. And I think also just fundamentally, we're at a very tangible inflection point here, which is the transfer of power, an election change, a new president, the new parties in power, so on and so forth. And so a lot of people who are not super plugged into the markets just see the fact that we're having an inflection change from a political standpoint. And a lot of people think that markets and the economy are heavily influenced by the president. I, in particular, don't necessarily think that that's true. And so a lot of people are just saying, great, there's this inflection point in politics, which means that there will be an inflection point in the economy and in the markets. And so in a lot of ways, they're just kind of applying that logic and therefore looking to sell equities, Bitcoin, crypto, so on and so forth. In my opinion, I think that's probably going to continue to be a headwind from both a psychological standpoint and just a fundamental standpoint, probably for the next 1 to 3 months, at which point tariffs are most likely going to have a negligible effect on market dynamics, right? Basically, new tariffs probably aren't going to have a substantial effect, right? At some point, there's a very famous phrase in markets, which is that bull markets climb a wall of worry. And at some point, I think that effect is probably going to take into effect.
Very interesting. T-shirt, anything you want to add there before we move on? I know, again, we have we're probably coming to the end zone of the topics we want to talk about here, but I want to definitely give Caleb any time to say anything else he wants to say here. Any thoughts on the tariffs from your side, T-shirt?
They're going to continue. I think they're going to continue. I think Donald Trump has goals, right? I think he has an idea of where he'd like the 10-year specifically to get down to. Maybe it's south of 4, maybe it's south of 3.5. That is the ultimate goal, in my opinion, for Donald Trump, is to cause so much tumult and chaos that risk rotates into bonds and brings that rate down. Now, I knew I had it, so that's my thoughts. And it's going to the tariffs are going to continue. How orchestrated the back and forth between Canada is, I think it's very orchestrated. I think it's there. Yeah. It's designed to just be chaotic and be scary, when in reality, the United States and Canada, they're not like this. They're like this. They're intertwined. It's a very healthy relationship. What you're seeing in the media is the opposite of that, right? So, you count it up, you do the math. What does Trump really want? He wants to refinance the debt. You got to get the rate lower to do that. But I knew that Caleb was going to be on today, and I knew he was going to say the market climbs a wall of worry. So don't go to my screen, Smay. But I have some other bangers that are in that Grok has helped me produce, that are in that neighborhood. Investing is a marathon. It's not a sprint. The stock market is a device for transferring money from the impatient to the patient. When the tide goes out, the strong swimmers keep swimming. Fearful sellers pave the way for faithful hodlers. Markets reward the disciplined, not the desperate. Diamonds are formed under pressure, and so is wealth. The greatest losses come from abandoning your positions too soon. And storms pass, but the foundation endures.
Wow. All right.
Those are good, man.
Which one was your favorite? Choose one. You have to ditch the rest of them, Caleb. Which one are you going to take?
I like the diamonds and the pressure one. I can't remember verbatim, but whatever that one was, I liked it.
Say that one again.
Diamonds are formed under pressure. So is wealth.
There we go.
There we go. Very true.
Very good stuff. Guys, if you have questions for Caleb, we do have a couple minutes left here. Go ahead and start dropping some questions. There was some chat earlier I wanted to read from a long, long time ago. We had a super chat from Kankles. He said, I have a tailor-made M2 driver. What driver do y'all have? Also, in my opinion, we see 74K before mooning. All right. Yeah, there's a poll put in chat. 937 of you have voted. It does look like our community is leaning 65%. 74K will come before 90K. Very, very interesting. We'll have to wait and see how that one happens. I'm going to be honest with you, Kankles. As much as I am loving golf and I want to get more into it, I am only 3 months deep into my love of it. I do not know the names of drivers to know what driver I have. I got it at Play It Again Sports, I think for $60. All right. So that'll tell you what you need to know about my level of knowledge. But come back to me a year from now. I'm sure I'll nerd out on all of that.
I know your driver's
Caleb, do you play? Caleb, yours is a TaylorMade or mine is?
Oh, I'm pretty sure yours is. Yeah.
I don't even know.
Mine's in Mizuno.
Do you play golf, Caleb? Do you ever go
No,
out
I don't. I got to pick it up though.
Yes, come on. It's new for us. I think Smay maybe has been playing the longest of the four of us. I don't know. T-Shirt and Smay kind of started roughly the same time. I started end of November, and it's becoming one of my favorite hobbies to do when I'm not looking at markets. So we got to get you back in the States and get a good golf tournament.
I'll come fly out for a round of 18. Why not?
There we go. Mithun Singh said, I like this show and I watch them every day. Miss you guys for the weekends for sure from India. Shout out to all of our friends in India. If you're from India, drop a 1 in chat. I don't know if it's still up to date. I know at one point last year, India was the fastest growing country in crypto adoption. So shout out to all of our Indian friends.
I think we're going to be seeing a lot more traffic from India, a lot more internet traffic coming to YouTube because Coinbase just got legal there again. So they just got authorization.
Yeah, it's true.
Yeah. So, I think a lot more people that, Coinbase likes to spend money on marketing. So they'll probably do that in India. And I know Indians, they love crypto. They love to buy crypto because they understand how much wealth it can deliver. For those who are really convicted about the technology and understand and don't go too far down the risk curve in the wrong time. So
yeah,
there was one more. That was bear markets don't last forever, but great companies do. So I put Bitcoin in there. Yeah,
very true.
Okay, very, very cool. Well, before we bring up the factoid of the day and call today a wrap, first of all, I'm going to ask Caleb some thoughts here in a second. Make sure that you are following Caleb over on X, Caleb Franzen, at Caleb Franzen. He is a world of knowledge. I love getting to see not just his X posts and kind of follow what he does, but also he has a newsletter that goes out. Right. He has a free newsletter. He has paid newsletters. You absolutely want to be staying up to date with what he's seeing on the macro charts. Are there links in the description for that T-shirt? We're going to add them later.
Tim, there are absolutely links in the description. They're just below the Limits Express amazing opportunity. They're under that link where you can go check out Caleb, his Twitter, and Cubic Analytica, the amazing newsletter.
Very cool.
Analytics, right?
I wasn't going to correct you, but yes, it's analytics. Cubic Analytics.
I had Cambridge Analytica in my brain for some reason.
If anyone has to tune out, just yet, Caleb, any closing thoughts you want to say to the Broz community before people leave? And then we'll get our Factoid today, but not everyone stays because not everyone loves Factoid today, which is sad. But anything you want to say to people before some people tune out?
I think this is a market. I've been saying this now for months, but I think it's especially valid and true right here, right now, which is less is more, right? So I think this is where you don't want to be actively trading. You don't want to be getting chopped in and out of positions. I think just staying patient, if anything, just closing the laptop in a lot of ways. I know this is actually counter to our incentives as content creators and as analysts, but in a lot of ways, I think the mental turmoil here, mental capital is a real thing. And so protecting that mental capital, in my opinion, in a lot of ways is just as important as protecting your financial capital, because the whole reason why we're focused on our financial capital is so that we can have a better mental capital. But if the markets are draining our mental capital just as much as they are our financial capital, sometimes you just need to take a step away. And I think that's totally fine. Give yourself permission to do that. And so again, I think less is more. If you are going to focus on indicators, I think paying attention to just that 200-day moving average cloud is really going to give you a clear-cut line in the sand here for whether or not, we're in an uptrend or a downtrend. And typically, I don't know about you guys, but I learned you want to own assets that are in uptrends. You don't want to own assets that are in downtrends. And so giving yourself a degree of flexibility there, I think, is also super important. So less is more. Pay attention to the 200-day moving average cloud, and don't forget about your mental capital.
I absolutely love that. And I think you're absolutely right. Like, that goes counterintuitive to what, people do. And we have a trading group. We trade all the time. And we tell people all the time, Do not trade with more money than you're able to lose. And I told you guys the other day, crypto is amazing. Making money is amazing. It's not worth losing your sleep, losing your mental capital. I'm going to start using that coin rather than just your health in general. It's not worth losing your family, right? There are people who will lose everything because they wreck themselves in choppy markets just like this. If you're able to mentally and financially and socially stay within and trade, yeah, that's good for you. If you wanted to be a part of that trading group that we have, great. But Caleb's 100% correct. If you do not have the mental capacity to ride these waves like this, close the laptop, step away, get a breather, go play a round of golf or something. Have some fun. Come back when things are a little bit more rosy. But love that advice. It's time to bring up Smay for I think like maybe 10% of our audience's favorite portion of the day. We still have 900 people in here, so maybe it's closer to like 50%. I don't know. It's the factoid of the day. T-Shroom is on quite the streak. He wins majority of them at this point, I would say. But let's see if we're going to give Caleb first dibs and full credit if he gets this right. Smay, what is our factoid of the day today?
Well, Tim, I will say, if we're out here discussing all this wisdom, I can't not be involved in this. So, I want to tell you guys real quick something very wise a man once told me, which is to join the free Discord. And with that, I'm going to give you some nuggets from Smay's original brain here that you guys can take that will help you to think clearly about joining the Discord. Here's one. Pleasure is only pleasurable in its contrast to pain. Pleasure not earned through suffering is suffering in itself. Yes. Another one. Solitude does not bring loneliness, or solitude does not breed loneliness. Instead, it is selfishness that does. Okay. And one last one. Indulging in selfish ambition is akin to fueling a raging fire. Embracing it leads to self-destruction. Think about that next time you invest. And all right, let's go ahead and jump into the factoid of the day, brought to you by Decrypted.tax. All right, this one's fun. Donald Trump themed, our president. Which of the following businesses did Donald Trump own in the 1980s? A, a professional football team. B, a chain of fitness centers. C, a movie production company. Or D, a national newspaper.
I have no idea, but Caleb gets first dibs here.
Okay, let me just think out loud here. I know for a while, I think he was an investor in the Canadian Football League or something, or some alternative NFL. But I don't know if he owned a team or if it was the league itself. A chain of fitness centers, I doubt it. A movie production company, I could kind of see that, and a national newspaper. Dude, I think I have to go with a professional football team. A final answer.
And that's, you know what? I was leaning away from A until you made it clear. The wording the elf put here is a professional football team, not an NFL team, right? I'm like, there's no way Trump owned an NFL team.
No.
I just found this out like 2 weeks ago. I didn't know the Canadian Football League, the professional Canadian Football League, is older than the NFL.
Oh, really?
Yeah. Nowhere near as profitable, obviously, but it's older than the NFL. That's really again, I was sitting actually at C or D. You brought up A, and that's very intriguing. Isn't that funny?
I'm going with A.
If he did own a Canadian football team, that's ironic with everything happening right now. But I'm going to go see. I'm going to diversify the pick here, guys. I'm going to say a movie production company. I know he was obviously The Apprentice. He was heavily involved in TV shows and film. A movie production company would make logical sense here, but I would love for A to be the correct answer.
I'm going to go Delta, national newspaper. He's
wow.
always been interested in information.
If it is B, we all have to drop and do 10 push-ups on the spot for failure. Yeah. All right, Smay.
Well, ladies and gentlemen, with that, the big reveal. It is A professional football team, and I have here something to show you. Did Trump own a football team in the mid-1980s? Trump became the team owner of the New Jersey Generals in the rival United States Football League and led the league in a lawsuit against the NFL to attempt to force a merger. The USFL won, whatever that means, victory in the lawsuit, though without a merger or a substantial financial victory.
Wow. Okay.
So there you go.
Well, we got the
There you go.
Canadian part wrong, but
Yeah.
Caleb Franzen wins the gold medal of today's factoid of the day. Caleb, thank you once again for being here with us. It's always a pleasure. Cannot wait to have you on very, very soon. Again, guys, go follow Caleb on X. Go subscribe to his newsletter. You're not going to regret it. And hey, watch the show daily, but sometimes close the laptop. Caleb's right. Close the laptop. Go get some mental health. Go touch some grass. Go hug a loved one. With that said, we'll see some of you guys tomorrow, same time, same place. Stick around, though. We'll be showing you over to the Alpha Bros video launching in just a couple seconds. Go give it a like. Go give it a listen. See you tomorrow. Adios.